Yes, good afternoon, everyone. Am I audible?
Yes, sir, you are audible.
Yes. So, welcome to the webinar on the basics of stock market investing. I'm Dr. Kapil Shimal, the Associate Professor and the Program Director at NISM, going to be with you for next 1 hour. The flow of the presentation will be, we'll discuss some slides that what stock market is, how to invest in stock market, what are the pros and cons of investing stock market. Then at the end of the session, I'm going to take some questions and answer round. So it will be like last 15 minutes or so, I'll give on the question and answer round depending upon the time permits to us. Apart of this, in between, if you have any question, you can just write to the chat box or you can write into the questions part. So where we'll take some questions in the last. Starting with what NISM is. So NISM started in 2006 as a capacity building institute by Security and Exchange Board of India. SEBI. The objective of NISM is to build the capacity in the India related to the securities market. And we'll say about the build the capacity, it means it can be as a part of the teaching, it can be as a part of the training, it can be as a part of increasing the knowledge of the investors and something like that. So starting with the very first part of this webinar, that again, this presentation is only as a part of the educational and awareness purpose related to the securities market. This presentation also is only the educational investor awareness program and shall not be used as a legal interpretation. So whatever the discussion will be there in the class or in this webinar, this is totally based on the awareness and used for the educational purpose only. It is not linked with the investment advice, or it is not linked with these how to invest, where to invest, and what are the discussions are there. That is only for the awareness of the participant. That is the objective of this particular program. Now coming to the very first part, when we say about the securities market, or when we say about the Indian security market, when where you are going to invest, because when it's about the Indian security market, you have to invest. Definitely, there is one body known as the Security and Exchange Board of India. The SEBI is a regulator for the security market in India. Under SEBI regulation, there are certain parts. So number one is the stock exchanges. Stock exchanges are the exchanges like NSE and BSE, mainly when we talk about the equity market in India, where all the listed securities are available for trade in the secondary market, either both of the exchanges or any one of the exchange, depending upon the permission that company has taken. So exchanges is the first parameter when you want to buy or sell any shares into the market. Under exchanges, the brokers will come. So it can be the broker, main broker, sub brokers. There are a number of brokers, there can be the only the online brokers are there, or we can say the old generation brokers are also there available into the market. With the help of broker, you will able to trade, you will able to put your contracts on the exchanges. The second body that comes under the SEBI is the clearing corporation. So clearing corporations will play a role for the clearing and settlement of the securities or the shares into the market. So when you buy or sell any shares in the secondary market, the clearing corporations will make sure that your settlements are there. So the seller will give you the securities, the buyer will pay the money, that work will be done by the clearing corporation. Then comes the depositories. So when it's about the depositories, so there are the basically two depositories, NSDL and CDSL in India, where whatever the shares you are buying and selling, your shares will be kept as a part of the dematerialized form with the depositories. So when you open an account with the broker, compulsory demat account is also required, where the equity buying or selling will be done, and at the end of the buying and selling, the position of that will be holding in the demat account to you. And finally, the companies will come, like the intermediaries, merchant bankers, registrar and transfer agents, and a number of entities are there. So when you are going to buy, when you're going to invest in any of the stock, you have to make sure that number one, the company must be listed on exchange. Number two, it is regulated by SEBI. Number three, the stocks will be available in the part of the demat. So these are the precautions before investing into the equity. If equity is not listed into the market and some fraud is happened to you, or you done any trade from the broker which is not regulated, not registered under the SEBI, and if you'll worry where my money is gone, I don't know. So always it will be the precaution to you when you're investing into the market. It should be regulated by the SEBI, and entities are available into the market. If you invest with the regulatory body, if you invest with the companies, if you invest in the exchanges which are regulated, so the chances of making frauds will be almost zero for you. So this is the overview or the structure of the Indian security market when you're going to invest. Now, when you're buying and selling the securities or shares into the market, the precautions or prerequisites are there that must be there required. So you need to open an account for the trading and securities. So when you open a trading and securities account, you must have the bank account with you. That is the first part. You must have the saving bank account with you. Why the saving bank account with you? Because all the transactions are in the form of digital. There is no case transactions are available. So when you want to transfer the money to the broker, you want to transfer the money to the clearing and settlement, your money should be kept in your bank account. Saving bank account will be there. So this saving bank account will help you to receive or transfer the fund for buying and selling of the security. Number one. Number two, you must have the trading account also. So trading account, it means it is with the SEBI registered stock exchanges, stock brokers, or the trading members. So this trading account will help you to buy and sell the securities. So once you have the trading account, you will give the instruction to the trading account or the brokers that I want to buy or sell the securities. The amount will be debited or amount will be credited accordingly, whatever the contract you will take from your saving account. And once the trade will happen, the securities will come in your demat account. So three accounts must be compulsorily with you when you are buying or selling any security into the secondary market. Without having the trading account, without having the demat account, without having the saving bank account, if you'll say I am going to buy the security or I want to sell the security, then sorry boss, the market is not accepting this type of things, because everything is transparent, everything is digitalization. So if you're buying the security must come in your demat account. You're selling the security, it must go out from your demat account. It should do with the help of trading account with certain brokers, and finally the receipts and the payment will be done by the saving bank account. So this is the three accounting system which is required and prerequisite before investing to the security market. If you don't have any of this account, then you will not able to do the transaction. So some of the banks are offering the 3-in-1 account. So all the three accounts are there in one sort of point of time. If you're going to open an account with the broker will say, okay, you have a bank account with you, link your bank account with the trading account with us, and we'll open the demat account also for you. And with the help of this, you will buy and sell the securities into the market. This is the part, prerequisites which is required. Now, when you are going to open this type of accounts, so some of the basic requirements are there. Number one, because when we'll say about the basic requirements, if you want to go open an account with a bank, if you want to go and open an account with the broker or with the demat companies, there are some basic requirements. Number one is identity proof. That identity proof is considered as a PAN card for you, because PAN number is must required when you are investing, when you're trading in these stock market. So PAN number is one of the identity proof. Then second proof is required as a bank account. And for the address proof, it can be the driving license, it can be the passport, it can be voter ID, Aadhaar card, or any other card which is legal or government approved address proof considerations are there. So these are the two parts it can be considered for the proof of identity and proof of address for you. Once you open an account, after opening the account, you must have a demat. The demat will be with the NSDL or CDSL. And with the demat, you must have the trading account. Trading account is live with the bank, so with the broker house. So this is the basic requirements when you open the account. Okay, now when you start doing investing into the market, especially into the securities market or the stock market, the stock market is basically divided into two different parts. Number one is the primary market, number two is the secondary market. So first I'll just give some basic information about what is a primary market, what is the secondary market. Based on the basic definitions of the primary market and the secondary market, we'll discuss how it is useful for you. So when we'll say about the primary market, if any unlisted company or the private company wants to raise a fund from the security market or from the stock market in the form of equity, so they want to dilute their equity, they will approach to the merchant banker. Merchant banker will help them to do the valuation, to help them to prepare the prospectus. That merchant banker will help them to put their prospectus to the exchanges, to the SEBI, and finally they will get the approval and they will list into the market. So primary market is a market where company first time listing their equity into the market. That is the primary market. The objective of the primary market is companies raising fund first time from the market. That is the first basic objective. Okay. So when it's about the best and secondary market, once this equity got an IPO will come into the market. After IPO, it is listed on the exchange. Then the already security holder or the equity shares are already listed on the exchange, that will be buy and sell between the investors in the secondary market. But in the primary market, first time the investor will buy from the company, but in the secondary market, the investor will buy and sell between themselves. So when it's about the definition, securities are issued first time to the public and trading already issued and listed security into the secondary market. So if the first time public listed company wants to go for public, they will come for the IPO, initial public offer. After IPO, if the company, if the equities are issued and listed on the market, then it will be available for trade. It is also called the new issue market. So new issue market because company is coming first time, and the post issue market is known as the secondary market. Now price determination in the primary market. So when an issuer like issuer company is consultation with the merchant bankers. So merchant bankers are the investment bankers. What they do the valuation of a business based on the all the assets and liabilities, and at the end of the day they will come with what should be the value of equity you are offering to the general public. Okay, so when the primary market price will be there, market price will be company will issue the shares to the general public with a price band. So price band is having the two different prices. Number one is the floor price, number two is a cap price. So the price range, that is known as the book building process, where the floor price and the cap price will be there. Okay, so as an investor, if I want to apply for an IPO, I must apply with the price band range only. So my bidding price should be between the floor and cap price. So just giving an example to you, if the floor price is, let's say, 410 rupees and the cap price is 414 rupees, as an investor, if I want to apply for the IPO, the minimum price I should bid for 410 and maximum I should bid for 414. If beyond this limit, if I'll apply for an IPO, then the successfully allotment will be not then my application will be rejected because the price band is predefined by the merchant banker at the time of IPO. Now, once the merchant banker will do the valuation for the business, it depending upon the per equity valuations, if the face value can be rupees 1, face value can be rupees 2, face value can be rupees 5, face value can be rupees 10. Okay, 1 to 5 and 10 is the generally face value of equity in India. So whatever the face value will be there, it will be the multiple times of the valuation. So if the 400 face value is rupees 10 and company is issuing at the price of 410, it means 400 times that company is going to charge from you as a part of the premium. So generally IPO will come as a part of premium when it is part of the issuing into the market. Once the price is determined, the successfully bidding will be done by all the investors. Then the cutoff price will be decided based on the bids happen, and after the cutoff price will be decided, whatever the cutoff price will be there, the successfully issued of the equity will be given to the bidders. It is not necessary that 100% allocation will be there, because generally in India you will see most of the IPOs will be oversubscribed and the pro rata based allotment will be done. So that is a simple price determination in the equity or primary market, where the merchant banker will help a company to determine the price of the share. Apart of this, the secondary market, when it comes in picture, in the secondary market, what happens, that is totally dependent upon the demand and supply of that particular equity, the price discovery will do. So secondary market will help a company to do the new price discovery. It might be possible as a part of IPO, if the company is issued that per equity share at 400 rupees, in secondary market, it might be available at 40,000 also, it might be available at 4 rupees also. Okay, so there can be a variation into the secondary market depending upon the demand and supply, depending upon the policies of a company, depending upon the regulation prospects of a company, depending upon the economical cycle of a country, depending upon the geopolitical risk, and number of factors which affect the secondary market pricing of the equity. Okay, so if you got an allotment into the primary market, in your holding in the secondary market can be available at a higher price also, it can be available at a lower price also. Now, when you say about the intermediaries into the primary market, the foremost intermediary into primary market is the merchant banker and the registrar and transfer agents. Whereas into the secondary market, the stock brokers, sub brokers, and depository participants are there. Those who plays a more role or more as a part of the intermediaries of buying and selling of the equity into primary and secondary market. The purpose of primary market is to raise the capital for the expansion, for the diversification, for buying new plant, for growing a business. There can be a number of purpose, because companies planning for the expansion that doesn't have money, they will go to the public. Companies planning to buy another company that doesn't have money, they will go to the public. Companies planning to start a setup into the abroad that doesn't have money, they will go to the public. So that is an important part of raising a capital into the primary market. The purpose of secondary market is to trading of security. So once you raise a money, now you're trading, you're buying and selling, you're investing, you're holding the equity. Okay. Secondary market will provide a liquidity to the investors also. So if you buy the share today, if you want to sell tomorrow, you can sell tomorrow also. That possibilities is there. So secondary market will provide a liquidity to you, and also raising further capital for the expansion. So in secondary market, you can come with the FPO, that is follow-on public offer also. Okay, this type of activities that you can do. So this is the two basic parameters when you are investing into the equity market. The primary market is the first time investors into the equity. The secondary market is already listed equities, can be traded, can be buy and sell amongst the investors or between the traders into the secondary market. The feature of both the markets are totally different. But yes, company cannot directly come into secondary market. First, the company has to come with the public. After coming public, company will go for the secondary market. Okay. So this is the basic difference between the primary and secondary market. Now, when we'll say about the primary market in somewhat detail, so already we have discussed some part, but yes, we'll discuss. So when the company come with an issue, public issue. So public issue can be done as a part of the two parts, initial public offer or follow-on public offer, or further public offer will be there. Okay. So in the IPO or the initial public offer, company will come for the fresh issue or offer for sale. Now, what's the difference between fresh issue or offer for sale? If company doesn't have the existing equity shareholder, so in that case, you have to just understand that part. There are three types of companies: private limited, limited, and public limited. Private limited, limited, and public limited. So we'll say about the private limited company, it doesn't have the equity ownership apart of the promoters of a business. Public limited is a company which is already in public. Already in public means the equity shares are available to the general public, that is already come with an IPO. But there is a limited companies, if you'll say. Limited company is a company which have the equity, but that equity is not listed into the market. Okay. That company is known as a limited company. If that company is raising the public issue, then it is known as offer for sale. So already the equity shareholder of a business or the promoters of a business are offering their equity to the general public. So most of the PSU, if you'll see the IPO of most of the PSU, it is known as a offer for sale. Okay, so the PSU companies, government is offering their holding to the general public, that is known as an IPO for the offer for sale. And fresh issue is the private limited is offering, the promoters are offering directly to the public issue. That is fresh issue. If already IPOs came, after a certain time period, company will feel that I want to raise some more money from this primary market. I want to issue some more equity, or I want to sell my more equity shares. Then it will come for the FPO. So this is the first part of the IPO or FPO from the primary market. Now, second part is the right issue. The company will give the right to the existing preferential shareholders or the debenture holders of a company as a right of equity. So that in that way also company can issue the equity shares to the market. Company can also give the bonus to the existing shareholders, bonus to the employees, ESOPs and something like that. So company can also give some more equity into the market. And finally, company can go with the private placement as a part of the preferential issue or private placement to the QIPs, qualified institutional buyers or qualified institutional placements will be considered. So when companies are issuing the primary market, there are many ways of issuing these equities into the primary market. Generally, when we'll say about the company going for the public, so it will come with an IPO. And IPO is the best source for investment for the investors, those who want to invest initially into the market for a longer time period. Okay, so this is a primary market. Now, when you are investing into the market, especially, and the question always comes in your mind that why I'm investing into the market. So one person is investing into the market is not necessary to support your financial need, but when you do not want to earn money, so let's take an example, the secondary income or something like that you want to generate, then it is required by investing a portion of your income. So some portion of income you're investing into the market, it allows you to allow you the money to grow and work for you. And so money to grow and work for you. So if you're putting your money idle into the bank account or into into the locker of your house, your piggy bank account up, when you're putting your money idly, then it is not working for you. आपका पैसा पड़ा हुआ डूब रहा है inflation में, that you can say. But when you invest your money into the securities market, into the stock market with a good script, when it is growing, so the money is working for you. That is the first part when you are investing in the market. There are basic three parameters will always be considered or suitable for the investment avenue. Number one, when we are investing, there must be returns. Without return, we cannot invest. Okay? If returns are not there, then we are not investing into the market. Number one. Number two, certain safety is also there. Okay, so if I'm investing with the help of registered brokers, with the help of what I can say, listed companies, then my safety part is there because it is regulated. And number three parameter will be the liquidity also. So when it's about the return, what I can say, returns, return is also associated with the risk and return trade-off will be required. My money, my investment should be liquid at any point of time, and some safety must be also there. Then there can be the various avenues where the money can be invested, like broadly classified into some of the groups known as asset class, like the stocks or the equity shares, which is most popularly known. A part of this, you can invest into the other asset class like the mutual funds and so on. Okay, so when you are investing your money into stock, because today's webinar is based on investing in the stock market. Okay, so when you're going to invest your money into the stock, the selection of the stock is always a challenge for you. Which stock should I buy or which share I should buy? The selection of the stock is one or more stock based on certain set of criteria, like in order to minimize the probability of meeting trading or investment objective. Okay, so when you're selecting the stock, your objectives should be clear. Why I'm selecting that stock? There are more than 5,000 scripts are listed available for trade and for investing to the market. Okay, but no one can invest in all the script at same point of time. Okay, if you want to invest in all 5,000 script, आप बोलोगे मैं 7,000 equity listed है, मैं 7,000 equity को today I'm going to buy. It is next to impossible. Although you can buy, but how will manage? How will select the equity? There is always a challenge. So which stock is good, which stock is bad, which company I should buy, which company I should sell. For that, you have to do certain research. For that, you have to do certain analysis. Without doing the proper research analysis, if you're buying and selling the script, if you're buying and selling the stock into the market, at the end of the day, you'll say, I buy that share today, but after buying, every day the share price is going down, 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 and down. I sell that share today, and after selling, the price is going up, 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 and up. So this type of things will be done. And why this type of things is done? Because we are blindly believing on some of the what we can say, influencers or some of the friends or some of the tip guiders to us, those who are giving a tips to us, after saying to them मैंने कंपनी को बाय कर लिया, बाय करने के बाद कंपनी का शेयर गिरना चालू हो गया, समथिंग लाइक दैट. I don't understand nature of a business, I don't understand nature of a company, I don't understand the board of management, I don't understand the policies of a business, and still I'm investing to the company. Okay, so it is always difficult. So, according to me, there is a saying that if you're buying an equity, it's just like marrying a boy or marrying a girl in your life. Okay, you have to build a long-term relationship with that particular company. Before getting married to someone, you have to do proper due diligence of that particular person. So, same thing, before buying the company share, you have to do the proper due diligence of that company, whether the company is good or not, whether the proper current share price is overvalued or undervalued, what are the fundamentals of a business, what are the actions of the regulatory body to the company, whether the company is facing any legal issues or not, something like that. So this all things will be managed, this all things will be do, and you can do this thing by selecting the limited number of equity. If you're going to do with 5,000 6,000 company together, then you will become mad. ठीक है, आप 5,000 कंपनी को एक साथ एनालिसिस नहीं कर सकते. बट इफ यू आर डूइंग विद दैट वन कंपनी, you invested your 1 to 2 months 3 months to study that particular company, the nature of a business, the balance sheet of a business, the profit and loss account of a business, annual report of a business of last 4 5 6 years you studied. Now you have come with a conclusion, okay, now the economical parameter is meeting with my objective, the company is good, company is going to grow in future, and something like that. Then if you're investing, so you have to give some time to the company for the study. Without doing the study of a company, if you're investing, then the objective will be not clear. So for doing, the one must prefer the fundamental and technical analysis for the two most preferred tool when you select the stock. Okay, so these are the two basic parameters when you're selecting the stock. So now when you say about the fundamental and technical analysis, again itself, it is a huge word or huge part of doing this particular research. So one by one, we'll discuss some part of the fundamental technical thing, and then it will become. So now when you're doing the analysis for the company, analysis for the investment into the company, sorry. So you first analysis that you have to do, you have to do the economical analysis of the country, economic analysis of a globe. This economic analysis can be macroeconomic analysis, can be microeconomic analysis. So you must be aware about the GDP of a country. You must be aware about the policies of a government. You must be aware about the geopolitical risk which is involved in the country, the sectors which are importing, sectors which are exporting, the companies related to the development of a country. There are the earlier there was a 5-year plan. Today the Niti Aayog is there. So what are the missions? What are the announcement in the taxations is done? What are the announcement in the budget is done? This all economical parameters you have to study. What are the RBI policies are there? RBI is going to increase the interest rate. RBI is going to decrease the interest rate. If company is related to bank, whether the interest rate will affect the equity positively or negatively, different parameters is always required. So if you're good into the economical analysis, because it will take a time to understand the economical parameters. But yes, there are certain economical parameters in the market where you have to study a huge, and this economical parameters also involves about these two broad indices or indexes in India like Nifty and Sensex. Okay, what is unemployment rate of the country, what is the inflation rate of a country, what is the consumer price index, what is the wholesale price index. Okay, all the indexes you have to read thoroughly, you have to know about the parameters. So there are a number of researches done into the market. You can see some of the good research papers available on some of the in general, some of the journals, that which economical parameters affects positively or negatively to the stock prices. Based on that, that is the first part, will give a hint to you. If the economy is growing, definitely the country will grow. If the country will grow, some sectors of the country will grow, and this sector, in this sector, this company is coming. So I should invest today in this company for a longer time period. If economy will grow, definitely my equity share is going to grow in future. That is the first part that you have to do. After doing the economical analysis, the second part is always required. That is the known as the fundamental analysis. So when you say about the fundamental analysis, it means you have to go through the annual reports of a company. You have to go through the balance sheet of a company. You have to go through the P&L account of a company and all other different parameters. So fundamental analysis is basically divided into two different parts: quantitative analysis and qualitative analysis. So when it's about the quantitative analysis, so quantitative analysis generally comprise of the company's revenue, what are the profit margin, what is the return on equity, what is the future growth potential of a company, what is the EVA, what is an MVA, what are the various financial ratios of a company, is saying with respect to the past data, past performance. If you'll see companies listed into the market since last 20 years, and since last 20 years, if the growth of a company, revenue growth rate, or the profitability growth rate of a company, let's say 12% per annum. So you can say every year it is going to be grow by 12 or 13% depending on the past performance. So it will give some benchmark to you, some hint to you. Okay, so this analysis is always required. Now, earlier days, it was very difficult to do all the analysis into one click, because you have to go through the annual reports for the different years of a company. After reading the annual reports, you have to extract the data, you have to put that data on the copy and pen, do the calculation with the help of calculator, and very tricky part is there. Nowadays, as a part of digital generation, there are a number of resources available. You can do that analysis in a single click. You can find the ample of reports available on the websites of the various platforms. You can download that data. You can put that data in Excel. You can directly put the formula. After putting a formula in Excel, you can do all the analysis. If you are not taking the data in Excel again, what you can do, you can directly do the analysis on the website or the portal also. There are a number of resources of doing this fundamental research. And when you're doing the fundamental research into the that is a quantitative tool analysis into the equity market, it has been saying here you to see is the P ratio of a company. It has been always prefer the lower the P will be the good, but definitely in the Indian market, all the P's are overvalued, that you can say. And the nature of the country is growing. That's why some of the persons will say you have to see the price to book value. Okay, so you have to calculate what the price related to the book value of a company, that is always be required. You have to do the calculation of return on equity. Then what is the ratio of equity, that net income with available to the equity shareholders, what is the debt equity ratios, current ratios, these all ratios you have to study. And once you study all these ratios, it will give an idea to you with a historical parameter. If you have all these ratios with you, you will able to know the trend of a business over the period of time. My equity is increasing, my values are increasing, my return is increasing, my profitability is increasing. And if the fundamental company is good, then definitely it will be good for the future also, depending upon the economical parameter. That is a quantitative method. Now, when it's about the qualitative analysis for the company, so it is related to company itself. It means what is the management experience and performance in the company, whether the management is interested into the business or not. That is a qualitative analysis you have to do. What is an objective of management, whether the management is following the corporate governance norms or not. Okay, that is again required. It is the industry and competition, so it is there into the competition, what industry parameters are there. So these are the qualitative tools where you have to take care, where investing into the fund as a part of the fundamental. You have to study about the management interest of the company. You have to study about the ESG reports of a company. You have to study about the corporate governance policies of a company. You have to study about the sustainability of the company. There are a number of parameters of qualitative. So when you do the proper quantitative and qualitative analysis as a part of fundamental research will give again, you can do certain analysis as a part of the, what I can say, tools of the states. like correlation, regression, some advanced models you can perform, and you're able to know this equity valuation based on this fundamental research is appropriate, and I should invest into this. After doing this economical fundamental analysis, at least you should able to know whether the current equity price is overvalued or undervalued for me. If it is overvalued, then I should not buy. If it undervalued, then it is giving an opportunity to me to buy the equity after a certain time period. It will be give the good value to me. So depending upon the fundamental parameters will be there. Now coming to the second type of analysis that is available into the market, and youngsters nowadays always believe on this type of analysis that is a part of the technical, because fundamental analysis will require a huge mind, huge time to invest. Technical analysis is totally based on the charts. So if you focus on the stock market rather than a company, the technical analysis will be there. It seeks to predict price movements by examining the historical data, mainly the price and volume. So if you'll perform that chart, so what the chart will do based on the historical price, it will give certain movement to you. So some movements you'll find whether what is the price over the period of time, what is the moving average of a price. Okay, that part you'll able to know. Then the underlying idea is that the market price is already reflects the fundamental given of a stock. And we all know whenever the announcement of the annual reports of a company, financial data of a company, management reports of a company, the price of the equity absorb that all the news into whether the positive or negative as a price discovery into the market. So whatever the price is there, we as a part of technical analysis will say, because already price has absorbed all the news of that particular company, so what are the prices there, that price is the best price based on all the sentiment. So you can ignore the fundamental also, and it is good idea for investor to leverage both technical and fundamental analysis to fill this gap. So you can study the chart. Now, when you study the chart, there are certain things like technical terms will be used, like you to go with the support level, you to go with the resistance level, the breakout in the price, trend line, what trend line is saying, what is the RSI, relative strength values of a company, and something like that. So I'm not going in detail about the technical analysis. There might be possible in future you have some webinar on technical also. But when you're investing in the market, you have to do both the parts. Either you can do fundamental, or you can do technical, or you can do both. Based on fundamental technical, you can come with your own analysis. Yes, this that I'm going to buy the equity, I'm going to sell the equity, or I'm going to hold this equity for the longer time period. Then simple basic difference between the fundamental technical, like fundamental analysis, the stock value is based on the economical and financial factors, whereas the technical is based on the historical price movements that we discussed. The fundamental is a long-term approach. So when you're doing the fundamental analysis, the fundamental analysis always say what is the long-term overview of myself depending on the past data of a company. So what is the long-term approach? Where the technical part will say for the short-term approach, today buy, sell, tomorrow swing trading, intraday, F&O, something like that. Okay, so very short-term approach will be used in the technical approach. Fundamental analysis use the financial statement for the analysis, where the technical analysis will use the price movements of the chart for the analysis. Again, it will fundamentally incorporate the new market information, and it is only focused on the past performance of a company. So both the analysis will have a difference. There will be different opinions, overviews, views of the fundamental technical between the investors also. But ideally, when you're investing into the stock market, you have to do both the analysis before selecting the company. Now, when you're investing into the market, there are certain steps or like approach for the great stock picking. So what are the steps will be there? Number one, approach the stock purchase as a buying a business rather than just stock purchase in the portfolio. Getting it? Because when we buy the stock, when we buy the equity of any company, we are not only buying the company, we are buying a business. We are becoming the partner of a business. We are becoming owner of a business. And with the vision of the buying a business, if we are having, then we'll understand the nature of business. If you'll only buy the shares, कि just see कि ठीक है कंपनी का शेयर बाय करके रख लिया, उसके बिजनेस से मुझे कुछ लेना देना नहीं है, so there is chances of occurring loss will be high. But if you understand the nature of business, you are going to buy the business, then the chances of occurring profit will be always there. Okay, this is one of the part. Number two, evaluate the true worth of business considering for the further earning potential. So true worth of business means you have to do the fundamental analysis of a business. You have to evaluate it, whether the business is good or not. Okay, what is the future prospects of a business that you have to do. Number three, the margin of safety is the real risk measure and not stop loss. So generally, when we buy the equity as a part of the technical chart is what we'll say, this should be your stop loss, but it should be the margin of safety. What should be my MOS before investing? Because when you're going for the long-term investment, it should be link of the margin of safety. It should not be the stop loss. Okay, that will be there. Do not depend on the turnaround as it is rarely occurs. And a turnaround means if suddenly company price went up, आज नीचे गिर गया, कल वापस ऊपर जाएगा, that is not next to possible. Subprime crisis came before almost 15 years before. It is going to come again, that we don't say. Rarely this type of things will happen into the market. Okay, so don't wait for the turnaround. You can invest at any point of time. Invest for a long term to generate inflation adjusted superior returns. If you're investing for a long term, definitely the returns will be the inflation adjusted and returns will be good for you. Short terms, you can read the SEBI reports published on the SEBI website, where how the intraday traders are making lows, how the F&O traders are making lows. Okay, almost 90% traders are making loss in F&O and intraday. So that is a huge part of concern, because the person before doing trading, they don't know the fundamental of a business. They don't know, because only they're trading, buying, selling, buying, selling, selling, buying, selling. So they're not understanding the nature of a business. That's why they're making a loss. But when you're investing, investment should be the long-term prospect, and the long-term prospect will give you the good approach before investing into the market. Now, again, when you invest into the market, you remember something, that always remember the financial goals and investment time frame. So what are the goal of yourself? What is the time frame for my investment? I'm investing for 1 year, 2 year, 3 year, 5 year, 10 year, 20 years, or till the end of my life. The time frame will be there. Each investment should be linked with your financial goal. Number two, review your financial goals periodically, at least once in 5 years, minimum once in 5 years. So whatever the goals are there, if my investment is linking with my goal or not, nahi kar raha tha, then you should change the equity. You should change the goal, something like that. That you do. You to do the risk and return profiling of the various assets are not constant. And that we know, risk and return of equity is different, risk and return of the debt is different. As per my age group, what is the risk, what is the return for me? That analysis I'm going to do. That part you to do. Then consider taking help from the registered and qualified investment advisors. That is always required. If the investment advisor or research analysis is not qualified, not registered with SEBI, and if he or she is going to give you a tip, then don't consider the tip. They have registered with SEBI. It means if some problem occurs, you can file a complaint against him or her on the SEBI. That thing. But again, they will not give a guarantee to you that this is a multi-bagger stock or this will give the good return to you, because investment in subject is always subject to market risk. But yes, if they are registered, then if any problem occurs related to fraud, then you can raise your complaint with the SEBI. Then no stock remains best all time. That is also required. And if any stock is performing good today, it is going to perform good also in future. That is no guarantee. There is a cycle of a business, there is a cycle of a company. Market is dynamic and you need to review your portfolio periodically. And that we all say. If you will say, I started trading into equity market at the time of COVID-19, but in last 6 months, I'm making a huge loss because in last 6 months, market was not performed good. But in last 1 month, the market has performed good. Again, I started making profit. So periodically, there is a market is very dynamic and changes is there into the market price that you have to understand. Some of the do's and don'ts into the market. So quickly we'll go to the slides, then we'll have the question answers. Then number one, make sure to receive fund or securities in your account within 1 day to put a date. That you have to make sure. If you sell that T+1 or T+0, currently SEBI started with some of the equity as a part of the part. But yes, T+1 is the part. So when you're trading, it means transaction plus one trading day, 1 day. your equity will come to your account, it will go out from your account. If your money will come to your account, it will go out from account. That is always there. Please read and understand POA before executing it. Please remember that POA is not mandatory document. PO is power of attorney. It means when you are opening an account with any of the broker, generally they'll ask to sign in POA. That is not a mandatory. If you're giving in POA to the broker, then they have a right on behalf of us to trade on your demat account or on your account. So always when you sign in POA, you must be cautious about it. Ensure to receive the contract note within 24 hours of your trade. If you're not receiving contract note, then again it is a part of trigger. You put a contract, but note is there. Then ensure they receive the statement at least once in a quarter. So nowadays, not only once in a quarter, the frequently stockbrokers are saying, sending exchanges are sending every month, every 15 days to you. So you're receiving a statement of your holding. Avoid keeping excess money to the in the broking account. It is not necessary to put your money in the broking account. Whenever it is required, you can transfer from your saving account to the broking account. You can buy the equity, but don't put the excess money in that. Ensure that the stockbroker doesn't pledge your security to raise the funds. So that is again one of the part. In the past, you can see some of the brokers has done the same thing. SEBI has taken the action against them also. Okay, so it should not be done. Don't keep the signed delivery instruction slip with the DP or the stockbrokers. It might be chances someone can do the fraud on this. So please don't do this. Regularly verify your balance of the securities in your demat account. So once you open the demat account, please verify what is the security I was having few months before and what is security I'm having today. If some deficiency is there, then again you have to approach to the DPs. Then to receive email and SMS alert, please ensure that your email ID, mobile number, that is proper KYC is done with the DPs and the brokers. So because frequently this the two-factor verification some brokers are doing. So you're going to receive the mail, you're going to receive an OTP, everything is required. So your email ID and mobile number must be updated. Don't trust any hot investment tips promising unrealistic return on investment. So something hot is there. So I'm just giving the best example. फिर हेरा फेरी 21 दिन में पैसा डबल. ठीक है, 21 दिन में पैसा डबल तो आदमी रोड पे आ गया. So this type of hot tips will only given the idea to give the alarm into the mind. अगर आप उसमें बह गए तो then your money will lose. Don't blindly intimate investment decision to others who may be have your profile from the investment decision. So don't intimate to others about your decisions, like who will be profited from your investment decision, जिसको profit हो जाए. कि आपने किसको बताया कि I want to do this, I want to do this, और वो आपकी investment objective को लेकर के he will say you कि buy this or sell this, तो आपको नुकसान हो सकता है. Then get clear about all brokerage, commission, fee, and other charges levied by the broker. So what are the brokerages? What are the commission? What are the charges? Everything should be clear on day one before opening the account. Make payment by banking channel checks only. Okay. Don't give the cash to the stock brokers or the sub brokers. Do not share your internet trading account password with anyone. That is again necessary requirement. Don't blindly follow advertisement, media reports about the financial performance of a company as they may be misleading. So what are the published report will be there on the website of NSE, BSE or exchanges. You can download that published annual reports, read that reports, and that will be helpful to you. So that's all from my side. Keep investing into the market, and I'm happy to take the questions. Yes, any questions? So we can help. So some of the questions I can read from the chat box is, so I'll go to the question and answer first. So any short-term course offered by NISM? Yes. You can go to the website of NISM. You will find the short-term courses that we are offering in the online modes. You can go and register for the same. Sir, can you please help for explain the demat account more in detail? So Abhay, the demat account is an account that is known as the dematerialized account. So all the equity that is you're buying. So earlier when you're going to buy the equity, it was a physical holding for you. आपके घर पे पेपर आता था. ठीक है. But nowadays equities are available into the demat form, dematerialized form. So all the paper form equity or any of the securities converted into the demat form. So it is kept with the two basically depositories in India, NSDL and CDSL. So both the depositories are there. Once you open in demat account, तो आप जो भी इक्विटी शेयर को बाय या सेल कर रहे हैं वो आपके डीमेट में रहेगा, आइदर इन एनएसडीएल और सीडीएल अकाउंट. स्टॉक मार्केट कंसिस्ट में थिंग्स, बट वी नो इट इज it for trading only. Why? So consist many things. So yes, Amit, that we can say, because stock market consists of many things, but why the trading only? Why? Because it is there that when we are into the digital era, we want to make money overnight. और जहां पे हम ओवरनाइट बनाना है, सो व्हाट विल डू, विल जस्ट फॉलो द पार्ट्स और विल गो टू द टिप्स एंड समथिंग लाइक दैट, वी स्टार्ट डूइंग ट्रेडिंग. हमें लगता है कि इफ आई बाय टुडे, सेल टुमारो, आई विल मेक अ प्रॉफिट, एंड एट द एंड ऑफ द डे there will be the net loss for you, there will no net profit to you. Okay, so to understand, stock market is there for trading, but traders, if you're not good into the research, don't do the trading. Otherwise you should go with the investment for the long term always. Okay, so what is the pro rata? Pro rata is nothing if the company is having 1 lakh shares and the 10 lakh application has come to the company. Okay, so company has to issue only 1 lakh share to 10 lakh applications. So what company will do, 1:10, हर एक एप्लीकेशन, हर 10 एप्लीकेशन पे एक शेयर इशू करेगा. दैट इज अ प्रो रेटा बेसिस. Sir, why are the IPO not allowed allotment to every investor? So Anil, again the part is there. You can see when the IPO is coming into the market, generally it is oversubscribed by n number of times. So same thing, if the company is a limited number of shares and lakhs of applications will come, that depending upon the how the application is come, what is the cutoff price, and the allocation will be done. How to find the good stock and the good companies? So Jyoti, as I told in my presentation also, the good stock and good company will be only done by your own selection, by your own research. If the company is good fundamentally, company is contributing into development of economy, then again it is going to contribute in the future development of the economy, then you can say that is good for investment. So good company, good stock will be only able to understand by doing the research of that particular part. Okay, how to find the market trends? Example, defense sector is going good recently. So again, Jyoti, again your question answer of your question is that after the Operation Sindoor, there was an announcement by the finance defense ministry that they are going to allocate some additional funds in the upcoming season of the parliament in the defense sector. So that's why defense sector is performing very good. Getting it? So that is the economical prospect of a company. So you have to link the fundamentally what is the economical announcement is done. So what does turnaround means here? Turnaround means, let's take an example. One company share price today is 10,000 rupees, for example. Before 3 years or before 5 years, at the time of COVID, it was 2,000. And you're feeling that again it will come to 2,000, so COVID will not going to come again at the same pace. ठीक है. सो दैट इज अ टर्न अराउंड. यू विल फील कि जब वो वापस से 2,000 आएगा, विल बाय, तो 2,000 आएगा नहीं आएगा दैट इज नॉट गारंटीड, पर 10,000 से ऊपर हो जाएगा. ठीक है. सो दिस इज अ टर्न अराउंड. How the taxes are applied on trading on stock? So I am not a tax expert, frankly speaking. For this you have to approach the tax expert, but yes, there will be short term and long term capital gains on the trading and investment invested. If you hold the equity for more than 1 year and sell it, that will become under long term capital gain tax. And if you sell the equity within a year, intraday trading अगर आप करेंगे या कुछ भी करेंगे, तो that will short term capital gain or loss for you. Should we buy different stock like pharma or so on? So Pallavi, my answer for this, yes, diversification is always required. So if you have the diversification, then that will be good approach for you. So what about the certificate? So certificate will be issued within 3 to 4 days from the certification team. Okay, immediately it will not receive. So how do I learn fundamental technical analysis? So Shraddha, my answer to your question is that there are the courses available on NISM also. We have the research analysis certificate also, where we have given the idea about the fundamental and technical analysis. We have some e-learning modules also on the fundamental analysis and technical analysis. You can go through that. How to research for the best stock. Again, to doing a research for the best stock, you have to devote a time, you have to understand the nature of a business, you have to understand the balance sheet of a business, and so on. How to migrate risk of IndusInd Bank like issue. So I will not comment on the company based question to you, but yes, risk mitigation will be done by using the early triggers that has been given by the economical parameters and so. So can you explain the price determination point in the secondary market? So price determination is nothing, that is a price discovery. Okay, whatever the secondary market price is there, that is based on the current demand and supply. If the demand and supply is high, demand and supply is low, depending upon the price determination will be there. Long-term fundamental analysis, I answered that question. Large cap, mid cap, and small cap. So the category of large cap, mid cap, and small cap is already given. So what is the top companies, mid companies, small cap companies? But risk and return for each of these cap companies are different, and depending upon the prospects you have. Could you please recommend some books for the study and improve the financial literacy? So Jagdish, you can just explore the website of NISM. All the materials or the study material of the NISM is available at free of cost. You can download it. Sir, we are doing 1 year PGDM diploma at NISM. Give your advice to me. So you can approach to the admission team for that. Tanish, are you there? If any questions I missed, so
So you took all the relevant questions.
all the questions. Okay. So if I missed any question, you can write to us. I will answer the question on mail also. And yes, so that's all from my side. I think we are with the time.
Yes, sir.
Yes. So thank you all of you for attending the webinar. Kind listening and passionate. Definitely you're going to receive your certificate within 3 to 4 days, and the relevant team will reply on this. Thank you.